Welcome to Green Giants, Titans of Renewable Energy, the podcast where insights and innovation meet. Every episode, we dive into conversations with industry leaders, experts, and change makers, bringing you the stories and ideas in the renewable energy sector that shape our world. And now, let's jump into today's episode with your host, Wes Ashworth. Welcome back to Green Giants, Titans of Renewable Energy. Today, we're joined by Winston Morton, the CEO of Climative. Winston brings more than 20 years of experience in engineering, cloud technologies, and energy systems, with leadership roles that span enterprise IT, cybersecurity, utility infrastructure, and clean energy innovation. Climative sits at one of the most important intersections in the transition: climate risk, home value, and the economics of resilience. Their platform helps homeowners, banks, insurers, contractors, and municipalities understand how physical climate risk affects a building, what upgrades improve performance, and how those upgrades translate into lower risk and higher value. Today, we'll explore Winston's path, the rise of the adaptation economy, and the emerging need for a unified data layer across millions of buildings in North America. Winston, welcome to the show.
Thanks, Wes. Really appreciate the invite. Great to be here.
It's a pleasure to have you. Excited to just get into the topics, but we'll first start just at the beginning and a little bit of your origin. So you started your career in electrical engineering and eventually stepped into senior roles across IT, cloud services, and energy. How did that journey just lead you to focus on climate, buildings, and resilience?
Yeah. I guess engineers are fundamentally problem solvers, so we're attracted to these systematic problems. And back when I graduated, it was back in the .com days and telecommunication days when there was a lot of changes in the market, and the market attracted engineers even into management functions because there was lots of problems to solve. So my early days were, working with large companies like IBM and working on some of these transformational changes in that digitization and, when the internet was just launching.
I'd say that systems perspective really shines through and that problem solving ability. And it helps explain how you connect the dots between the energy technology and the built environment as well. So with Climative, approaching its 10-year mark, which is incredible. What was the original problem you set out to solve, and what made you believe the industry was ready for a new approach?
Yeah, we were zooming in on kind of the human factors of using and managing energy. The utility sector, by and large, is still the same way, is, delivering electrons for a business is fairly straightforward. There's a lot of systematic challenges in delivering those electrons. But a lot of times there's human factors that you need to take into account when you're delivering those services. So we saw an opportunity not only to help customers of utilities kind of measure the energy they're using. There was a really large gap in the action that people were taking to conserve energy. And so not unlike the climate world today, we see lots and lots of organizations show the problems, but not many organizations showing the solutions, right? Yeah. So you can show a utility customer that they're using more energy than their neighbor, which definitely brings awareness and maybe even some annoyance. The real tricky part is what do they do about it? Yeah. And so that's what Climative was formed to do, was to kind of move that from measure to action mode. And so we spent a lot of time in our first few years with utilities building those interfaces, helping customers understand their energy use. And that just naturally, as most startups do, they naturally iterate on a problem. And we start to see a mass market opportunity to talk about, energy transformation and resilience measures come into effect. So we just applied the same models and started to develop the market in a much bigger way.
Yeah, I love that. I love the focus on action. We've talked about this and we'll get more into this as we go. And I know, so when Climative began, as you just said there, utilities were that sort of natural entry point. What helped you recognize that the greatest leverage in the energy transition comes from also engaging homeowners, financial institutions as well, and contractors, rather than just focusing solely on utilities, where you started?
Yeah, it was really about finding that impetus to start the conversation with the homeowners. So the utility obviously sends out a bill every month, but there are big life decisions that happen in every homeowner's point of view. And so that ability to start the conversation when the homeowner the building owners in the right mindset. So you are dealt with different life circumstances when you renew a mortgage, or you start a new mortgage, you buy a new home, or you have a new member of the family, or there's times when you should be meeting the customer where they're at from a needs point of view. And so the utilities, as much as we love working with utilities, they don't often have that point of view of meeting the customer from a life perspective. We started looking at, when you're buying or selling a home, it's a natural time to have that conversation with a homeowner. When you're getting that really big insurance increase bill, it's a good time to have a conversation with a homeowner. When there's a life event happening, you're getting close to retirement, you have a new baby in the house, or you're moving your mother-in-law. And these are things that are drivers to review, is my home comfortable enough? Is it affordable enough? Is it safe enough in today's world? And so those are the things that are really driven by emotional decisions, not necessarily the number on the bottom line of your energy bill.
Right. Absolutely. I think that shift highlights where actual decision making and action happen, to your point. I often say, people make emotional decisions, then they justify it with logic. Emotion comes first. It's a reminder too, just progress comes from meeting people where influence is strongest, meeting them where they are, and then driving real change. I love that. Many energy programs, you highlighted this problem. I want to get into this. So many energy programs rely on comparing a homeowner's usage to their neighbors. And, the average homeowner goes, okay, I use more energy than neighbor X down the street. What do I do about that? So why does this approach maybe fall short when it comes to driving real action? And I know this is kind of where you've centered a lot of your business around and solving this problem.
Yeah, the kind of the taking action is kind of there's three legs to that stool, right? There's knowledge, knowing what to do, and then the second part of that is being able to afford what to do. So do I know what to do, and can I afford it? Do I have the capital to do it? And the other thing is do I know the mechanisms to get it done? Do I know the right contractors? Do I have, a relationship with somebody to help me get the work done? So those three legs to that stool, if any one of them are missing, generally action doesn't happen, right? So oftentimes we're focused on kind of making it easy for the homeowner to understand the options in each one of those methods. It's funny, in the early days of experimenting in the kind of the action side of the business, there were studies that we would do. We used to do something called non-intrusive load monitoring, which is basically breaking down your energy bill into components of use. Yeah. So your appliance use, or heating and cooling use, your electronics, your entertainment use, and all those things. And when you break them down in front of the customer, one would think if you give the customer more granular information, they may take action. But one of the early studies that we saw in the middle of us deploying these technologies was a study where a utility sent out a postcard to a segment of the market, and they built a very sophisticated energy use breakdown portal for the other segment of the population.
Right.
Let that run for a period of time. And when they got the results back, they had almost the exact same effect on energy use. In other words, the postcard that said you should do better captures around the same amount of attention.
Yeah.
And energy rates actually dipped for a while.
Yeah.
And then they went right back to normal. Sure. And so it just goes to show that no matter how well you're informed, if you don't have a path to action, it's not an easy thing to fix from a human nature perspective.
No, not at all. And it's cool that doing those studies and kind of seeing that. And I think being realistic and focusing on, we're dealing with humans here, and humans are unpredictable, emotional creatures, that you have to factor that into the equation. I think some people don't do that, and why some solutions fall a little short, but I love it. You've got that really at the center. Can you tell us a bit more about that? So I know with the focus heavily on activation rather than simple awareness is what we just kind of highlighted there. Tell us a bit about just how you focus on that. What does that actually look like? How do you get somebody to activation versus maybe just pushing data at them in a postcard and going, here's a breakdown of all your energy usage and nice little graphs and all this sort of stuff. What does it actually look like when you're involved?
Well, first start is, we talked about the three legs to the stool, but the other one is simplification. So many homeowners are actually overwhelmed today in the sense that if you give anybody in the population too much information, they tend to have paralysis by analysis. So inundating that homeowner with 10 different messages from 10 different sources makes it very difficult to know what to do. So we tend to try to simplify the advice to something that means something. So a lot of
Yeah.
times it's kind of bring your own journey. So we allow in our platform, you allow the customer to kind of focus that journey in something that matters to them. So whether that's cost, comfort, or resilience, you can put that in context of what it means to me today. And it might
Yeah.
not even mean the same thing today as it does in 2 years from now. But so this concept of providing these static programs really is not the way customers behave. Circumstances change. And so we're developing this concept that you're providing a living plan
Yeah.
for a homeowner that was going to experience different circumstances throughout the life cycle of a building or ownership of the building. So that plan really needs to be there when somebody needs to make a decision, right? And close to retirement's a really good example.
Yeah.
You know, your mid career, you might not be as sensitive to your energy bill, but as you get towards the end of your career, hope I'm not speaking too much from experience, but as you get towards the end of your career, you start to think about your fixed priced versus your variable costs in home ownership. And one of those things is an energy cost everyone sees continues to go up and up.
Yeah.
It doesn't take a lot of math to realize if you're on a fixed retirement income that one may outweigh the other. So most of the time, if a customer is getting to the point where they're getting close to retirement, they're willing to make investments in their home that's going to reduce that risk of future excessive energy bills. So that's an example of meet the customer where they're at. Right?
Yeah. Yeah. I love those focus too, just understanding those windows of time, right? Where somebody is most likely to activate and do something about it, and paying attention to those, I think is great. I love that people focus side. And I think, now that we understand a little bit of the, your personal story, the company foundation, and kind of how it works, how you operate, I want to look a little broader at just market forces shaping how buildings are valued and financed today. And so with that, there's a growing shift from prevention to adaptation across the climate space. Tell us, I guess, explain that a little bit. And then what signaled to you that this shift had reached a turning point?
Yeah, I think we're in the middle of the turn.
Yeah.
Yes. So it's early days, but I will say there's been a market change in people's awareness of climate, and mostly because adaptation is getting built into risk, and risk gets built into costs. And so I would say in 2025 to 2028 or 2029, in this next period, the average consumer is going to notice the cost of climate where maybe they didn't notice it in the past. So, we've heard lots and lots about climate, and those of us in the climate business talk to each other a lot and convince each other that climate's important. What's really happening now is, and it's a double-edged sword, but we have more costs being built into our supply chains and our properties because the cost of capital is going to include climate risk. So the bad news of the edge of the sword is we may have missed the boat on avoidance. Now the climate is changing, and it's changing fairly quickly. And so we're seeing those losses drive risk premiums in just about every part of our lives, our food chain, our supply chains, our buildings. And so that brings visibility. Now, we would have loved visibility without the climate losses that we've seen there. But the fact is, the bills are coming due. Right. People are starting to pay more attention now. So this is where adaptation, and then the last part of adaptation is climate disasters are easier to quantify than some future value of emissions, right? So one's typically a government policy with a long-term objective, and it's fairly difficult to price that in from a risk perspective in the average business. And that's where the mode we've been in for many, many years. But catastrophic loss is as tragic as it is now being recognized and built in, and it's priced. So that's why we're seeing such a big focus on adaptations, because it's hitting just about every industry now. So, that's really what drives visibility.
Yeah. And to your point, as it is tragic, we don't want those things to happen. It is typically what drives real change. When we experience a level of pain that hits a little closer to home, most people, they're just going to maintain status quo and keep doing what they're doing, even if they think, I should probably do something different. But until that happens, some event happens that affects you personally, affects your family, then you go, oh, wow, okay. That drives me to action. So that is, I think that's part of the, again, human condition. It is what it is, part of it. But I do think the observation captures a real market shift, which I think is interesting to see when that focus moves to adaptation. I think economics start to change really quickly, which we are seeing. And with that too, so banks and insurers are costing climate risk into their products in meaningful ways. I don't know that everybody knows this or is thinking about this, but how is this reshaping mortgages, premiums, building valuations across North America?
Yeah. So, if you look at the fundamentals of a value of a building, a retrofitted building or an efficient building generally is more resilient. It can last longer in an energy outage. It's generally built to higher construction levels, or it's retrofitted to a higher construction level. The simple fact of a building being more affordable also has an impact on the default rates, because now you're not competing for that same wallet share for a mortgage to be paid.
Sure.
So you've got a higher, and then the asset value goes up. So now you've got a more resilient building with a higher asset value because it's more attractive to buyers, and you have a less likely chance of default because that building is cheaper to operate. So there's a lot of benefits in the financial system to look at resilience in buildings. And traditionally that actually wasn't taken into account. The price of your energy bill was never taken into account when you get qualified for a mortgage. But more and more that risk is getting built into that initial decision the bank needs to make.
Yeah. And it's probably still early stages. You would think that becomes even more so. If that's starting now, what's on the horizon is that's going to be really baked in and built into all those valuations and assessing risk and all of that as well too. And obviously, I think some of those changes feel, subtle in a way, but they do have enormous downstream effects on affordability and access to capital as well too. Let me ask you, so for someone who maybe doesn't follow climate finance closely, I'd say a lot of people probably don't follow it closely. How would you explain physical climate risk in terms that relate to just everyday decisions and expenses?
Yeah, sometimes I give the credit card example. So you've got a roof that is getting close to being ready for replacement. And that roof has 15-year-old shingles, and you know that the shingles only lasted 20 years. And you can choose to replace that roof today and take out maybe a low interest loan and getting that roof replaced. And you have time, you do planning, you put a new roof on, and you've prevented that, occurrence of a leak. Or you could wait. And you wait until that roof leaks. Now you've got flood damage in your home. You're under a tremendous amount of pressure to get that roof fixed in a real hurry. You don't have time to negotiate bank rates. You end up putting that roof upgrade maybe on your credit card. And now you've got a 5-time bigger problem to deal with. Well, to some degree, there's an analogy from a climate risk perspective. We've waited until we see massive changes in climate, which drives a lot of climate disasters, which has a much higher premium than the prevention would have had. Right. So sometimes I say, when I'm having conversations with folks that aren't climate people, to say, look, how would you feel if there was a credit card that got opened in your name 20 years ago, and the balance has been getting added to, and you just got notified that you owe the payments on that credit card, whether you like it or not? Well, we all own that credit card, right? And now we have to pay it off. And so when we get our insurance bills this year, most people's insurance rates are going up from, 15 to 40%.
Right.
That's our increased rate. And we're paying credit card kind of charges on that, which if we had prevented the issue in the first place, probably would have been cheaper.
Yeah.
That's the way we see this. And then the other credit card analogy is, and this gets into the core of the data requirement in the market, is there's no common risk register for buildings. So the banks require a risk analysis or the insurance companies require a risk analysis. So when you go to take a credit card out, well, the credit card you qualify for has a lot to do with your credit rating.
Sure.
Right?
Yeah.
And if you have no credit rating whatsoever, you're not going to qualify for a very good credit card, because the bank assesses you at a very high risk. So the same analogy goes to a building. If the building has no history and no rating, the bank's forced to give that building a low or a high risk rating because there's no data on the building.
Yeah.
So our premise here is to create a register that allows the banking and the insurance and all kinds of industries to collaborate on the value and the ratings of buildings en masse, critical mass.
Yeah, it's so cool. I love the simple analogies. I think probably my favorite way something gets explained and you're able to really just wrap your head around it and go, oh, wow, that makes sense. And you're right. So kind of it's all coming for us. And I would say, I said this quote last week is like, and I forget who said it, but best time to plant a tree was 20 years ago. Second best time is today. So you can start doing something about it today. That's the second best time. And so no, I like that explanation. Makes a ton of sense as well too. So you mentioned obviously we're seeing these increased climate events, and I think it's hard for anybody to really deny it at this point. Like you're seeing these pop up more and more and more, where we say like 100-year storms that are now like, oh, wow, this is happening on a regular basis. So, we're seeing tens of billions in losses from floods, storms, wildfires. Why is the pricing of physical risk accelerating so rapidly right now? Maybe it's because of that, but it just, if you could explain that a bit further.
It's probably not because it's accelerating. It's probably because it's catching up. So, regulatory agencies, in the financial sector are just getting caught up. So
Yeah, sure.
I think the awareness is moving. And, I think to some degree, once you move from policy into commercialized risk, those wheels tend to move faster than government policy.
Sure.
There's less unknowns once the commercial market or the commercial sectors get a good handle on the risk, it'll happen pretty fast. Now, I'm not suggesting that we're going to continue to escalate prices at the point we may see them in the next couple of years, because I think we are playing a little bit of catch up here. But let's hope that, climate disasters level off. Let's hope we plant that tree today.
Yeah.
And we hope that we inform the next 20 years to reduce that risk. And we can't stop thinking about that, right? And sometimes when we're talking to commercial customers, it's about risk and it's about profit and it's about savings. But at the end of the day, we have to build in the resilience and the climate impact reduction for the next 20 or 30 or 40 years, or we will be escalating.
Mm-hmm. Absolutely. No, I like the way you clarified that. And it is more of like catching up. And just thinking about, just climate progress, I think many people still do believe policy is the main driver of climate progress. We've talked about it more this year on the podcast and beyond in conversations about just the economics and really that being a forefront of the conversation. Why do you think the next phase will be shaped more by economics than policy?
And maybe that's the light at the end of the tunnel for us, is the scales from an economic perspective have tipped for lots of climate friendly technologies. You look at renewables are the clear winner in economic measure in many, many circumstances.
Yeah.
So, if you just let economics win. Now, sometimes there's anti-economic policies in place that make that difficult, but sometimes economics are there, but the awareness isn't there. So when you can match those two things together, the planet can win. We can have the double bottom line savings or profit. And then the same thing happens, back to the supply chain thing is if the price shows up in the pocketbooks of more and more people, they may take more interest in the emissions that they're generating and realizing that this is impacting them every single day. And so that's the economics. And if a mortgage for an inefficient home costs more than a mortgage for an efficient home, markets tend to take care of themselves, right? People will invest to save money. And so it's unfortunate that we have to probably dip a little too far into the cost side of the business to do that. But the fact is, that's probably how the market's doing.
Right. It is what it is. And I think the idea that economics will carry this forward is both practical and encouraging, suggests momentum to me that is harder to reverse. There's a selective few of us that really care about climate. Everybody cares about economics. When it hits your pocketbook, hits your budget, I think everybody's paying attention. So again, it's encouraging to see if that's happening. That's where the future is. I feel, a lot of hope for where we're headed and the growth that's ahead. What do you think most people misunderstand about the connection between resilience upgrades, insurance pricing, loan performance, and just long-term home value?
I think I hate to come back to economics again, but I think your operation cost of a building will be a bigger decision factor in the future than it is today. If someone buys a new home today, sometimes they get the energy bills and the insurance bills, sometimes they don't. But I
Yeah.
think when you run the numbers in the informed buyer
Yeah.
perspective, I think the operating costs are going to make a huge impact on, the cost of that place to live. And so as that dynamic changes, I think it will change people's perspective on, is that home, comfortable and safe and
Right.
efficient.
Yeah.
The other really interesting thing that we see in the market is you don't get to test drive a home,
Right. Yeah.
right? And so
True.
you kind of get what you get.
Yeah.
And this ability to maybe see, the black box or the building ledger of what's happened in that home may become a bigger part of that home acquisition process, because I kind of want to know what that home's been through and what's been done, because it's going to have an impact on me for a long, long time.
Yeah.
You've got Carfax for cars,
Yeah.
right? And cars are a lot smaller investment than a home. So it's the Carfax for the home, right? So I think that's where we're going to see a lot more awareness in the market. Again, the market dynamic will be maybe the buyer community will be the driver of that rather than the owner. But, we'll see how that shakes out.
Yeah, for sure. I think it's coming. But I think, outside of just seeing resilience, seeing this as a value creator rather than a cost, it wasn't too long ago when it really was viewed as a cost. And I think some people are still stuck in that old kind of mindset. But now, it's creating value, as we've said several times over here. Some powerful lens for homeowners. I want to shift now from just the market landscape to Climative's platform and the data foundation you're building. And so there's a helpful analogy just comparing, and you said this a bit ago, I just want to kind of double click on it a little bit. So just comparing that today's climate risk landscape to a period before credit bureaus existed, and you talked about sort of the credit score for a building. How does that absence of standardized climate and building risk data just affect decision-making today?
There's a lot of guesses that happen today. So I think that the economics will drive the investment in more data. Most markets today, the financial markets, the healthcare market, just about every market you can think about has been digitized. And the energy market generally hasn't. Generally, people are getting, home energy assessments on paper, and they're left a binder on their kitchen table, and that binder never gets used again. And the cost of that is substantial. And the scale of it is very challenging, because we just can't assess enough homes in a year to have substantial impact on the resilience and the retrofits as we need them to change. So I think that's one of the areas that, from a data point of view, and we need to move quicker. This is one of the areas we use, fairly sophisticated machine learning models and AI models to do this. It's one of those use cases that makes sense to augment the existing system that's there today and provide a lot more data to a lot more stakeholders, so we can get the economic engine moving. And it's one thing we didn't touch on from an economic perspective. This is probably one of the largest economic opportunities in North America, is the retrofit business itself, whether it's upgrades to the home or it's renewable installation. You've got over $1 trillion of backed up positive return on investment projects sitting on the books. And so why aren't we unlocking those? It's making homes more affordable. It's saving homeowners money. It's making homes more resilient. It's making them more comfortable and safe. And why aren't we doing way, way, way more retrofits? Well, it's because we don't have the data to justify it.
Absolutely. Yeah, it really points, I guess, how big the opportunity is and the problem, and of course, what you're solving. With that, the opportunity. So you've spoken about a market that includes roughly, 120 million buildings across North America. What does it take to build a data layer that can operate on that kind of scale?
Yeah. So from our point of view, we tend to lean on third party and maybe even mirrored markets to validate what we do every day. So, having a Climative score, if you will, or a third party score is not very valuable if it doesn't meet some industry standard that the industry can rely on from a repeatability and a credibility perspective. So most of the time we work in ecosystems that have similar accuracy and similar approaches from a statistical analysis point of view. So I'll give you an example. The automated valuation market, which is the ability to value a building in the market, actually started with Fannie Mae 20 years ago or more. And so that ability to create a digital value of the building really sped up the mortgage process. Now, is it 100% accurate? Absolutely not. Is it close enough that it reduces risk to that mortgage issuer? Absolutely, as long as it's within a range. And that accuracy continually gets checked and validated. So the banks and insurance companies already use digital assessments in their business practice, right? So we look to take inspiration from markets like that to say, okay, what's the old adage? All models are wrong, some are useful, right?
Yeah.
So what can we do to create transparent, trustworthy data that is good enough to reduce the risk? And to some degree, we're replacing something that just isn't scalable today. And so that's what we do is we look at kind of mirrored markets. We spend a lot of time with regulatory and standardized bodies that are doing similar work in this space.
Yeah.
Canada and Europe have quite sophisticated taxonomies on energy and emissions, and we leverage those kind of lessons that solutions have been in market for quite some time. And so we leverage those things to kind of come up with this category and say, okay, this is an example of what's been used in the past, and maybe a little bit of an ancillary industry that we can replicate. Yeah. So that's how we build it. The data we use typically starts out taxation data, which without question, all buildings get taxed in North America.
Right.
That's one variable that we can be assured of. And so that database is generally helpful for us because it provides us base data we can use to feed our platform. It has things like age, size, and location and construction type, things that we need to kind of start that conversation. So we use that as a ubiquitous data. And after that, we have homeowner engagement methodology. We can collect utility data. It all adds more and more validity and accuracy to the data.
Yeah. It's really cool. I mean, obviously the scale and complexity of it shows how ambitious the effort is, but I love a couple of things, looking to those sort of parallel places and industries that have done something similar, kind of building off of that and not reinventing the wheel entirely. I would imagine too, with just how prominent machine learning and AI and everything else is coming into play as well too, probably certainly helps it tackle, a problem that large as well too. It is super interesting. And I want to talk a little bit about just this activation model that you have that connects, knowledge, affordability, and execution. Why did maybe these elements fall short when they operate separately? And what becomes possible when they work together?
Yeah, some really good examples. One would be the average conversation between an insurer and a homeowner, where it may benefit the insurance company to have more resilience measures in that home. Let's take a sub pump, for example. If you're in a flood risk zone and you want to install a sub pump in your home, there's almost no circumstance where the return on investment of discounts off your insurance premium pays for that sub pump. Right. But if you look at that house in a more holistic way and say, hey, my basement's a little uncomfortable. I was thinking about renovating the basement to make my basement more energy efficient. And I'm going to install a sub pump as part of that overall project. Well, there's actually quite a lot of return to create more self-healthy and safe spaces in your home.
Yeah.
And that's a bonus check. So you've checked the cost, you've checked the comfort, you've checked the resilience all in one upgrade. So traditionally, those two conversations don't happen at the same time. And the homeowner doesn't even think that there's an opportunity. So, the same thing would happen if you're going to insulate your attic or replace your roof. Well, maybe I hold off my solar panel installation until I replace my roof because I'm going to have to replace my solar panels. And while I'm at it, I could put a steel roof on, which is more fire resilient.
Yeah.
And it might cost 10% more, but in the overall project, it doesn't have a major impact on the return on investment. So these are things that you can check off as part of that conversation with the homeowner. And not all contractors or all service providers think about maybe there's a better way to expand that conversation with the homeowner at the point where they're doing the project. So those are the kind of things that we see, it's a great time to have that discussion.
Yeah. And obviously Climative doing this. So I'm curious just how it actually works. And probably listeners are wondering the same thing. Like, what actually happens? So how does Climative pre-educate homeowners so that they arrive prepared, confident, and ready to take action? Like, what do you actually do?
So we tend to work in jurisdiction by jurisdiction. So we're launching, in the US, we're launching by region. And in a region where we're active, you get access to your home energy or your home navigator that allows you to evaluate that those three pillars, right? Comfort, cost, and resilience. And you can actually change those priorities depending on your life circumstance to be able to provide some advice. And that advice is independent advice. It gives you some things to think about. You can put more information into the tool about your home and the upgrades you've already done, which gives us a better accurate advice basis, right? And then the other side of the platform is there's offers available. So you can see, if you're interested, see what offers are available for your home. Is there a special rebate or a financing opportunity that matches your home specifically? So this is all about that personalized. And we've all become accustomed to personalized things, right? So no one wants to be treated as a generic program adopter. And that's what happens today. An efficiency organization just blasts out these rebates. Nobody knows if they qualify or not. And so we pre-match those. And that makes it easier for you to kind of think through the numbers. And it's not just numbers, it's comfort or it's resilience as well. So so that journey is one where you claim your home, you fill in a little bit more information, and we then try to find those life points. And that isn't the end of the conversation. It could be next year there's a new product in your area that might benefit you. We'll pre-assess the benefit of that product. It could be in 2 years you're changing a life circumstance and you're moving your mother-in-law in the basement and it's kind of drafty and damp down there, right? So those of us that don't want a drafty and damp mother-in-law, we might have to go do something, in the upgrade of our home. So I think that's the point, is we want to make an online personalized experience.
Yeah, and I think so true with how people do want to interact and make buying decisions today. They want to be informed, want to kind of go at their own pace. They don't want somebody like selling them right away. Like I kind of want to go through and be informed a little bit, know what I'm walking into, know what questions I ask, those sort of things too. So it makes so much sense, such a powerful solution. And to that too, like most homeowners do want these sort of industry neutral guidance. What does neutral advice look like at scale, and why is that so important?
Yeah, and the other term here is empowerment. So I don't necessarily want to be sold something. I want to be informed so I can make the right decisions. And there are stakeholders that actually not necessarily have a horse in the race from the point of view of what you do. It's just encouraging you to do something. Municipalities are a really good partner, or state level governments when they're trying to address, an affordability or a climate transition goal in an entire market. Well, it doesn't really matter as long as you're making good decisions. It's going to, rising tide floats all boats, right? So you're those kind of partners for us align very well because their intentions are aligned with, personalized advice. So, whether it's on your phone, however you want it delivered, do you want a text message, or you want, or maybe it's part of another third-party system where, you're in your bank app and you have a little widget saying, hey, your mortgage is coming up for renewal. Did you know that there's a project available that's going to save you X amount of dollars per month or per year, and you're already approved for the finances, right? And so it makes it easier for you to kind of check those boxes off and start that conversation.
Yeah, I love this kind of integration of all those things, even your banking relationship, those kind of things, and connecting those dots makes so much sense. Many sectors in the space still do operate in silos, and so can you tell us a bit more just how does Climative help banks, utilities, insurers, government programs, contractors, all align around shared data and shared incentives?
Yeah, that's maybe the most powerful. So having a transparent data platform allows collaboration against multi-industries. So, banks may not track the attributes of the building that insurance organizations or state and local governments. And oftentimes there's, whether it's real or artificial barriers on sharing that data, those data service bureaus exist all around us all the time. And so it does speed up the market from a digital adoption perspective. So our opinion is, it actually can't be owned by one of those sectors because it may default by not be available. It's the reason one large bank doesn't own the credit reporting agency is because all the other banks probably wouldn't use it, right? So there's this transparent, independent component to the platform. And then even down to the contractor level, a contractor just wants educated customers that can make decisions quickly. So there may be more than one contractor competing in a given region, but having educated customers, it's good for everyone. Right? And the contractors can compete on their own products and services and quality, right?
Yeah, I love it. And back to that kind of credit analogy, sort of that common data language, obviously can speed progress in a way that individual programs just never could. As we get a little closer to time, I want to transition a bit into just the broader opportunity, the workforce behind it, and also your expansion into the United States as well too. So you mentioned this earlier, and I want to go back to it a bit. So there's roughly $1 trillion of retrofit opportunity waiting to happen. What's holding it back, and what needs to change to unlock it?
Well, capital is probably, knowledge is probably equally as challenging as capital. So we've only provided professional advice to less than 10% of the building stock today in North America. So we've got, and that's taken us 20 years. So we've got 90% of the building stock with no professional independent advice. So without that, we're probably not going to move the needle very far. We can only, using existing methods, we can probably only give advice to somewhere around 2 or 3% of the market. 50% of those customers do something, right? So our activation in traditional models, and we're mostly talking about physical going into buildings and providing advice. There's still definitely a role for physical assessments. It just doesn't scale very fast. So we would say first advice, and then and that gives you the knowledge. And then the second part is the capital market. Climate aware funding is still a niche market. It's available. It varies widely across the United States. Some states are very active in climate financing, some aren't. But even when there's an active climate financing program, they have a hard time convincing customers to use it, right? So activation of capital and allocation of capital, I think, is probably the next biggest thing we need to do. We believe that climate aware capital can take advantage of that. And when we talk to banks in the US, it's just activating capital for very low risk projects. So that's really the goal here, is to put this front and center in the capital stack and say, hey, there's a huge opportunity here. And then the last part of it is the ability to do the work. So we may not have enough electricians and plumbers and construction crews and renewable energy companies to provide that $1 trillion worth of service. But the cool part of this is we can plan for that. So the great thing about the US is if there's a commercial opportunity, the market will expand to take advantage of that opportunity. Tons and tons of economic development opportunities right across the country, right? This isn't just big cities. This is rural areas, to a large degree, the rural areas need this more than the larger cities. And so we put people to work. And the better we can plan that workforce development, we're all a little bit worried that AI is going to take over the world. But we need a ton of work done on the places that we live and work. And I think if we harness that, we could create a whole new economic benefit in North America.
I agree. Those are you made those points perfectly. Those are the things I get really excited about and fired up about in terms of where we're heading, the enormous potential and opportunity, which is incredible through that as well. So you're also expanding, I know you expanded into the Northeastern United States with new projects and a presence at Greentown Labs. What made that the right moment to grow into the U.S. market?
We took the New England market or the Northeastern market because there's a lot of collaboration between Canada and the US and right across, anywhere close to the border. There's a collaboration from an energy perspective. So culturally very similar. Programs are very similar. And from our point of view, it's just a natural place to launch into the US. Now, having said that, there's some amazing pockets of opportunity all over the United States from a business development perspective. So we just choose to launch there, but we're pretty opportunistic. We can move wherever the opportunities are.
Yeah, it's cool. It makes sense. It's logical, opportunistic. It can make that happen. So excited to see your growth and that continue. As we get closer to closing, a couple more questions. So as we close, I want to look at the world you're working to build and how people can really take part in that. So let's imagine Climative fully scaled. How would everyday life change for homeowners, lenders, insurers, and contractors?
Yeah. So I think we've alluded to it a few times in the interview, but the ability to easily determine next steps and your impact on the climate goal would be our goal. So, the activation of every, in this case, building owner, which represents, more than 20% of our emissions in the country, and physical property risk is one of the biggest challenges we're going to have as we see these climate impacts. Every building should have a plan, every single building. So our vision would be everybody gets to participate in that plan, and there will be actors that are going to support that plan in many different ways. And so having an easy way to attach stakeholders to that plan and do that digitally so we can move very, very quickly, I think would be our vision. The outcome would be to hit 4 or 5 times the retrofits that we are doing today.
Yeah.
And that will just hit our climate goals for 2050, right? So back to your tree analogy. If we don't plant the tree today, it's never going to be mid-size or full size in 20 years. So, we'd like to plant as many trees as we possibly could, as fast as we possibly can. And in our world, that's, creating these plans.
Yeah, great vision. It's ambitious, but I do believe it's achievable. And I'd agree. Start today, making those things happen. So final question, I'll just kind of open it up. Anything you didn't get to share, things you would like to kind of add, things you'd like to leave listeners with, sort of final pieces of words of wisdom, advice, hope, anything else you want to share?
No, I really appreciate it. I think, this is a fundamental shift in the market today. So, we're really looking for, particularly as we experiment to some extent on how these models work, we're looking for partners in the market that share the vision. And, and we really appreciate, influencers like yourself spending time thinking about how we could make big changes in the market. Because it's going to take a village, as they say, to get these things done. So, feel free to reach out. We're moving fairly quickly into this expansion mode. And we really look forward to engaging with a lot more folks.
Yeah, excellent way to wrap it up. And I'll link a lot in the show notes just for you directly, the company. So please check those out. Anyone that's listening. And reach out and make contact. Vincent, this has truly been a fantastic conversation. I've enjoyed it so much. Your work at Climative brings clarity to an issue that affects every community and every building owner, and it helps define how climate risk translates into financial decisions and long-term opportunity. To our listeners out there, thank you for joining us. If you found today's episode valuable, which I'm sure you did, please subscribe, share it with someone who would appreciate it, and leave us a rating. It helps us bring more conversations like this to a wider audience. And with that, we will see you next time.
This episode of Green Giants, Titans of Renewable Energy, was brought to you by Lee Group Search. If you enjoyed today's discussion and are looking to recruit top talent for your company or find your next career opportunity in the renewable energy sector, visit leegroupsearch.com. Let's continue driving the future of clean energy together. Until next time, keep pushing toward a greener future.